Welcome to the STR Data Lab.
Hello and welcome to another edition of the STR Data Lab. I'm Jamie Lane, Chief Economist at AirDNA, and I'm joined today with two guests. And this is a very special episode for me because I've got two of my friends and former colleagues from CBRE and PKF Hospitality Research, Mark Woodworth and Jack Corgel. Mark and Jack, welcome to the podcast.
Jamie.
Thanks, Jamie.
Yeah, Jamie, thanks for having us. It's a treat for me because the two people I learned most about the hotel industry from, I'm on the line with now. So it's terrific. A lot of good memories.
Well, I'm going to assume that most people listening to the show have no idea who you guys are. So maybe we could just start with each of you doing a brief introduction of maybe your history in the hotel industry and then what you're up to today. So Mark, start with you and then Jack.
Okay. I won't go back to when I was 11 years old and got my first job in the hotel industry, but I will go close to that. I did. I was fortunate to sort of like you, Jamie, spent a lot of time growing up in the Northeast and for me, it was Northern New Hampshire, and that's what got me exposed to the hotel resort industry. I was fortunate and went to hotel school, both undergrad and graduate. And because I was fortunate to go to Cornell, that's where I first heard and learned about Jack Corgel. Jack got there, not surprisingly, much after I had left, but I wish I had the benefit of learning from Jack back when I was a student. But after getting out of operations after grad school, I quickly found that I really enjoyed being more on the research advisory side of the business. And that's where I've been for the past 45 plus or minus years now, and really playing the role of understanding principally the real estate finance aspects of the lodging industry. And when folks ask me, what do we do today? It's something I've done all my career. Is we fundamentally focus on answering one of two questions for any assignment that we take on. The first is if I buy this piece of hotel real estate or if I build a hotel on this property, what will the profit stream look like going forward? And the second question is, how will the marketplace value that profit stream? If I'm a lender, that's going to be my collateral. How much am I going to be willing to loan to the borrower on that particular opportunity? And of course, if I'm the owner, if I'm the equity that's involved in the transaction, there's a certain return threshold that I'm looking to get. So if we think about all the issues that go into answering the first question, it's supply, demand, pricing, changes in supply going forward, the expenses I need to be prepared to spend to earn those revenues that lead to profits and so forth. So, to very abridged value. So that we focus on understanding the drivers of change in both of those spaces. And again, and maybe Jack, I'll use the segue. Under Jack's leadership and with Jamie's help, getting it to a whole new level, we were able to develop, starting in the late 90s, back at our old PKF days, and then subsequently, ultimately with CBRE that acquired our company, there was enough data available. I knew that if I could surround myself with the right minds, we could develop objective ways of predicting future hotel income streams. And Jack really led that effort. As mentioned, Jamie, when you joined us back however long ago it's been, took it to a whole new level. But Jack, so I'll turn it over to you and take it from there.
Mark, that was an excellent review of your past. In fact, the podcast is probably over now.
Sorry, that was the short version. So
my introduction to the hotel industry was somewhat accidental. I'd grown up in Ithaca, New York, where Cornell University is. I always wanted to be a Cornell professor when I grew up, and eventually got there by route of being asked to advise on the development of their real estate program. So my educational background was largely in business schools and in real estate investments and finance. I became interested in hotels because I felt it was important to specialize in one segment of the commercial real estate industry. I started writing articles there with that objective in mind, and then I went to Cornell to interview really not to interview, but to provide some advisement, and they recruited me to come to the hotel school. So I spent 30 of my 40 years in academics at the hotel school. And I was fortunate to meet a lot of very interesting alums of that school as I was in Atlanta teaching at Georgia State before I went to Cornell. I met up with Mark Woodworth, and he and I our friendship grew over time. So about 1990, I started at Cornell in 1989, 99. I felt the intellectual energy of the country had shifted from academics to the business world. Mark and I got on the phone and we decided to start this research group called PKF Hospitality Research. And we grew it into a forecasting company with a lot of other interesting features. As time passed, Mark and I sort of divided our expertise into. Mark was the person who knew everything about what was going on the ground on day to day hotels and who's building them, who's selling them. And my perspective was more from flying over at 10,000 feet, kind of merging what was going on with the economy in both nationally and locally and how that translated into hotel performance. So we had this good marriage of interests. And then we brought on some really smart people, including Jamie Lane, to to sort of guide us into the future as we were getting a little stale. But so Jamie helped us immensely in growing that business. The business was ultimately purchased by CBRE and still operates today as CBRE Hotels
Yeah.
Research.
Jack, and as I think back, it was a lot of fun until this short-term rental stuff started up.
Yeah,
It kind of
that was
mucked up the traditional
why now a
hotel
real
world
game
to some
changer.
degree.
Hmm.
But fortunately, yeah, I was going to say, fortunately, Jamie was a participant back in the very early days and educated Jack and myself as to, hey, this is something we ought to start thinking about and looking at. And fast forward, Jamie, what, 10 years now, whatever it's been since you first told us about it. And yeah, it's obviously it's big.
Yeah. So I definitely want to get into the short-term rental industry and sort of how we've seen it sort of broadly impact hotels. But Jack, I want to start with you. So you were talking about and the broad economy and how it impacts lodging and future lodging income streams, and just sort of get your current pulse on the economy. So, and we had the jobs numbers come out today. It was another strong month. We're recording on Friday, March 8th. So we've been creating 250,000 jobs a month. GDP in Q4 was up 3.2%. It's tracking 2.5% in Q1. Unemployment's been below 4% for 2 years. Inflation's been easing down. The Fed's it's sort of signaled an end of rate hikes. I'm feeling pretty good. I uh, what are we missing here? Like, what's sort of around the corner that we're not seeing? Like, or should we be feeling good about the economy?
The headline numbers, as you reflected on, are quite good, and I think many people are doing very well in this economy. But there are there's some problems here. Number one, inflation is a percentage change in prices, and since the beginning of the pandemic, prices have increased to over 18%. So the people who don't have the sort of benefit of high incomes are feeling the pinch at the grocery store. Insurance costs have gone up. So many people aren't experiencing the same euphoria that would go along with the numbers that you have provided us. The other thing is high interest rates, which go along with inflation, are preventing many young households from entering the housing market. It seems their hopes are fading fast into maybe being an impossible dream going forward, because it doesn't appear even if the Fed cuts interest rates by a quarter of a point or half a point, it's not going to bring us into territory where a lot of people can afford the monthly carry on housing, especially since housing prices are at a record high and don't seem to be relaxing. And I know we're going to get into that later on. So, final thing I'll say about this is the federal government pumped in probably about $5.5 trillion into the economy through various acts that were passed, the CHIPS Act and the Infrastructure Act, et cetera. That money did not hit the economy in one big chunk. It is being delivered to the economy in a stream, and we haven't seen the end of that stream. There's still lots of money to be distributed. So some of this economic euphoria is being propped up by remaining government money, uh, uh, building bridges, building ship factories, those sorts of things. So when that dries up, we'll see as maybe you have young children, Jamie, maybe see how they walk once they reach the end of their infancy stage. So that's kind of my take on the economy at this point. The good news is that the hotel industry, it rides along with the economy, and those numbers that you reflect on, especially people having jobs, incomes growing now at a real rate, are good for the hotel industry, and by virtue of extension, good for the short-term rental industry.
Yeah, so I'm remembering back to and you teaching me what to care most about. And I think you drilled into my head, focus on jobs, focus on real personal incomes. Because if people have jobs and they have incomes, they're gonna be able to continue to spend on travel. So, Mark, from an economic standpoint, what are the factors you see as sort of in the current economy and how that's sort of currently influencing lodging demand and what are some of the current trends you're observing in the lodging market today?
Sure. As usual, I agree with about 98% of what Jack said. I feel obligated to start with the other two. Not really. It is. Let's start with the jobs report. And I haven't had time to process this and come up with my own view of what I think it actually means. Having said that, the first thing I'm going to look into are the revisions that were made. And I believe they were fairly substantial. And so, to the degree that these job numbers are a little greater than really what they end up being, then maybe that's a sign we should be start getting a little cautious about things and so forth. If we, as you said, Jamie, I mean, we know from studying history that jobs, changes in real personal income, a business investment, they move the needle when they're growing, when they're expanding. They move the needle in terms of traditional hotel demand, and to some degree, I would expect the phenomena is true when it comes to the demand for short-term rental accommodations. So I'm seeing more signs that are making me, frankly, more cautious for the near to midterm. I do think that I'm a big believer. Again, Jack and Jamie, both of you, just a question I continue to get a lot every 4 years is, hey, it's election year. We got a new president. Does that move the needle? How does that affect things and so forth? And in my memory, the answer is, unless you're like in Merrimack, New Hampshire, and you got a gazillion reporters coming to interview you and so forth. From a macro perspective, it really doesn't, and it doesn't. The year of the election, it doesn't really make a difference. And then clearly, if there's new policies because of a new administration or new policies because it's the old administration's last 4 years, and it takes a while to work its way into the system and so forth. So, but my overarching view right now is I am a little more cautious than I was. And I know, Jamie, I know you've talked about it before in some of your presentations you've done. This whole notion of there's certain elements of the population that from an economic health perspective, whether it's from the wealth effect or they still have plenty of savings, whatever the case might be, they're feeling very good. I mean, they still have the means to travel. And Jack, I know you've done a lot of work on this notion of more and more people having the time to travel. But on the other end of the spectrum, and we're seeing it very clearly in the traditional hotel numbers, where it's the lower price lodgings that have had 2 or 3 or 4 now, even consecutive quarters of year-over-year declines in demand. So, and we've seen that phenomenon in past cycles and so forth. So, again, I don't want to come across as a boo bird on this kind of thing, but I do think there are some legitimate reasons why let's be a little cautious and setting expectations for the balance of the year.
Well, Mark, what about But the supply side of the hotel market would maybe moderate some of your negative energy on the future, wouldn't it?
Yeah, it does, and I think yeah, and the reality is we've had meaningfully below long run average supply change for quite some time, and given capital costs and et cetera. So, but that I think for the foreseeable future and perhaps then some, we're going to see below average traditional supply growth. But on the other hand, when I was a kid starting out doing this stuff, back in the late 70s and early 80s, we had an explosion in traditional hotel supply growth. A lot of it was driven quite simply, but we had a non-recurring phenomena happened and played out in the late 70s and first half of the 80s, and that was women entering the workforce in significant numbers. And obviously that participation rate has persisted since then. But fundamentally, Jack, I know you know this stuff better than I ever will. But if we think about all the hotels that were built and the segmentation phenomena, all suite, luxury, all the stuff that happened back then, that product is now 35 to 40 years old. So you've got functional obsolescence, you've got economic obsolescence. Markets can move away from hotels, make them obsolete, and so forth. But so I think there's a replacement element to the supply growth we're seeing. But then I think there's also this kind of, as this stuff continues to age, is there some kind of ongoing residual impact, frankly, on both traditional lodging and in short-term rentals, to the degree that some of these older lodgings end up functioning more as apartments and for families and so forth. I don't know, Jack, what say you? Am I missing something, or is there some
No, no,
to that?
I think that, yeah, the aging effect is something I haven't really thought much about, but you're absolutely correct that these with 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 slower supply growth than long run average, the stock gets older quicker. It's not being replaced, so that's definitely a drag because as we all know, new beats old every day, and we're not getting enough new product into the hotel inventory to sort of satisfy that need. Now, having said all that, I don't know if you want to get into this now, Jamie, but I'm very bullish on the long-term demand side of the hotel industry, largely because of leisure. Leisure travel is those two words can be parsed to think about leisure as something that has basically kept the hotel industry and has certainly been a uh, bell cow for the short-term rental industry. The people traveling for leisure has been a very important component of the paid accommodations industry in general. And it's because people have more leisure time. Productivity, technology have all contributed to a shorter work week. In 1920, the work week was 50 hours. Today, it's in the low to mid 30s, and so people have a lot more time to travel, and their incomes have risen, so they have the income to travel. And there's an interesting phenomenon called a backward sloping curve, where if wages are going up, people work more, but at a certain point, they decide I've worked enough and I have a high enough wage that they start bending back to allocating more of their time to leisure rather than work. And at the higher income levels, that's certainly what we're seeing. So I'm very bullish on leisure travel, and I know that's obviously very important to the short term rental industry. I think both subsectors are going to benefit greatly in the future from leisure travel. And then there's the idea of travel. Well, it's no accident the Fifth Amendment of the U.S. Constitution has a travel provision that allows people to travel freely across the states. And many philosophers have opined on the fact that there's this inherent desire to travel. And Mark and I have always kicked around the idea that people will travel when they have the money and they're not afraid. Certainly, they were afraid when 9/11 hit. They were afraid about having their money sucked out of the banks when the financial crisis hit. And certainly they were afraid during the height of the pandemic that they were going to get really sick on an airplane and not reach their destination. So right now we're at a point where there isn't fear of travel, and people have jobs. Their savings seem to be eroding, especially in the lower end of the income spectrum. But generally speaking, the conditions are ripe for continuation of leisure travel. And I think any retrenchment that's occurring now may be due to the fact that it peaked so greatly during the early post pandemic period of when people had this pent up demand for travel. I think we're now kind of moving toward a more steady state in leisure travel, but the long term growth prospects I think are phenomenal.
But
So,
and
Jack,
I'm sorry.
mi-
Hey, Jamie, I'm sorry. I'm tired of listening to Jack. I have a question for you. Not really. So, Jamie, given what Jack just said, I'm assuming it's showing up in your numbers in terms of, older, wealthier, have the time to travel. If you look at if in round numbers, if your domestic short-term rental supply, if it's a third resort destination, a third something else, and a third something else, I mean, is your data supporting Jack's view or no?
yeah, I mean, we're seeing more demand for short-term rental accommodations than ever before, and the growth is slowing. So we're growing at maybe 6% now, where we were growing at, 20% 2 years ago, but we're still growing significantly faster than the traditional hotel industry. So, and when you look at the type of demand sort of using short-term rentals, it is primarily leisure travel. So, Jack, when I was sort of listening to you talk,
Mark wasn't listening. I'm glad you were.
Right.
there's sort of a question that popped in my head of a debate that I've been hearing play out of we've seen really strong productivity the past couple years after maybe a lull. There's all this talk about AI and LLMs and what that might do to both productivity, but also like the need for jobs. And we sort of know and what can happen with job destruction and what that might mean for future lodging demand. So, and as you think about lodging demand over the next decade, do you see it playing out where there's higher productivity so people are traveling more, or we're going to see half the population lose their job and not have the means to travel?
I think the positive scenario is what's going to play out. That is, AI is going to step up productivity just increase the long run trend toward more leisure time for travel. And again, my proposition is that travel is a superior good for using your leisure time. You could use your leisure time to stay home reading, but people have an innate desire to travel. Now, the story about AI being a job killer is being debated. The two positions on this, one is it's going to kill jobs. The other is that we need new and different kinds of jobs. We need job training to, you can think of a traditional hotel. You're going to need more. If you have robots running around, you're not going to need as many people doing service activities, but you're going to need more people to make sure there's a backup robot if that one fails, if it breaks down, or there's a software glitch. So you may find more tech people in the hotel and fewer service people, but it's not clear that there's going to be a huge decline in the number of jobs that are available to people. So I'm positive on this. I want to make one other comment. The whole idea of trying to understand business travel versus leisure travel is mucked up by the fact that when somebody comes to check in a hotel or rent through a short-term rental management company or whatever, and they ask them, well, why are you traveling? Are you traveling for business or leisure? Well, they say both. And there's really no way to discriminate between those that are pure leisure and pure business, because there's, especially since this pandemic and remote work and everything, there's a merging of those purposes for trips, and it's hard to get a grip on things. The only thing you can be assured of is productivity continues to increase, freeing up. You can do the same work in less time than you used to be able to. And that's fundamentally a very good thing for leisure activities such as travel.
So maybe long leisure, maybe a little short on business, if some of
Yeah,
those trends play out.
that could very well be the behavior of a lot of people today and going forward.
So, Mark, picking up on one of your earlier comments about the sort of supply cycle that you saw during the 80s and early 90s, we've been seeing some wild trends in supply growth in short-term rentals. And unlike hotel supply, which is relatively fixed and sort of changes with a clear warning, like get a pipeline report, we see a new hotel and when it's going to be
Yeah.
sort of come in, you can sort of plan around it. Short-term rental inventory, we can see it's really volatile. And we saw a decrease during the pandemic. We saw it come back really strongly afterwards as sort of demand came back. It was up like 25% in 2022. Like, can you imagine hotel supply going up 25% in 1 year? And there's a lot of talk in the industry about market saturation. And occupancies have decreased from the peaks that we saw during COVID. So you analyze hotel markets and you've seen sort of the impact of supply. So, like, what do you typically see, and like, how should investors sort of think about these market fluctuations as they sort of and think about investment strategy and sort of what markets to go into, and maybe how these market fluctuations sort of react over the long term in these markets?
Sure. And Jack, listen closely to this one because you'll probably want to correct a number of things I'm about to
I'm
say.
sure I will.
But it strikes me. And I'm thinking about the half full and the half empty answer to your question, Jamie. I think the half full answer is it's short term rental. It appears to me anyway. It's relatively easy to get into that business. There's an existing structure being used one way, and conceptually, with the flip of a switch, I could use it somewhere else. So that's an option that exists that implicitly says there should be some value associated with that option, that I can have an alternative use very easily from the purpose-built use. Whereas in a hotel, that doesn't exist. It also strikes me that on a relative basis, I mean, Jack, well, we've got data on the hotel industry going back to the late 1920s to some degree. So we can study the behavior of the traditional hotel space over multiple cycles, and for factors that cause cycles to go up and down, many different ones. And we talked about already. Most recently we had a pandemic a public health issue. Prior to that, you had the great financial crisis, so it was a financial market issue. And then we had the 9/11 .com stuff before that. So on the one hand, there's a lot more known about the traditional lodging space because of the age of it, and also because it's a purpose-built structure. The other hand, and Jamie, I know you know the answer to this. I don't, but you know, but before we called them short-term rentals, there was a lot of that stuff that was out there. It wasn't labeled that way, but we encountered it, particularly obviously in resort markets. But on a relative basis, it's a new industry. So there's a lot of stuff that we don't know yet that we're only going to learn as we go through cycles. But I think that the other dynamic, and Jack, I know you over the year you've done a lot of work on the housing side of things. That this whole question of option value, it's a function of, well, I got to look at it on a short-term rental basis, or I've got to look at on a traditional 6 or 12 or more month basis, or maybe I occupy the unit myself. So I hope I'm speaking to the question that you asked and so forth. But for me right now, if I was on the short-term rental side of things, I would just be really intrigued with how do I figure out what's going on the residential housing markets, and what's going on with interest rates, and layer into that how aging of the population and challenges for first time home buyers and all that stuff. But Jack, I mean, I'm just interested. What do you say on that?
On the housing market question?
Oh, and then everything I said, but particularly housing.
Yeah, no, I fully agree with the whole option value story. I mean, if short-term rentals aren't working out, you can go to a longer term rental. You can sell the property fairly easily in a very fluid housing market. So there's lots of benefits to being in that position. Counter to that, look what the situation is in office right now. Office buildings don't have much option value. So a lot of these office owners are stuck with this remote work situation, and they can't easily convert to other things. But the housing market is pretty strong right now, despite some obvious frictions of high interest rates. The shortage of houses relative to the population that wants to own a single family home is driving prices in real terms in a positive direction. So the indexes keep showing 5% increases in housing prices while inflation rate is at 3.5 or so. And that's despite the fact that many people, the transaction volume is low due to the fact probably most people would agree that it's that people who have 3% mortgages are reluctant to give those up in a sale. And if they have to get transferred to another city, they'll quit that job and find another. We still have 8 million job openings in the country. It peaked at around 10, but there's still 8 million openings. So the job market, is available to me. In terms of winter, I've always held uh, the view that you sort of start with the states. You want a state where there's no income tax. You want a state that has right to work laws. You want a state that's business friendly. And so there's no surprise that companies like Blackstone are heavily invested in the Tennessees, the South Carolinas, the Floridas, the Georgias, the Texases. So those places really offer, I think, the best opportunity for expansion of paid accommodations.
So, Jack, that all makes sense to me, and sort of translating that to what we're seeing in short-term rental investment today, like, and I think the alternative use case of the single-family homes sort of totally makes sense. Like, if you invest in and it doesn't work out, like, convert it to long-term rental, sell it. Like, it's a very fluid market. Housing prices have continued to go up, so the ease of getting in and out, like the relative transaction value isn't that high relative to maybe traditional commercial real estate. Mark, as you are doing all these studies for existing hotels and new hotel development, when you hear sort of what we're talking about with short-term rental investment of and record high home values in a market where it's like, how is that continue to happen with everything going on with interest rates? So we've got interest rates at 7%. We have falling short-term rental revenues. Like it's arguably not a great time to invest now in short-term rentals. People are because it's and it's a long-term growth play. What are you seeing in hotels? What are hotel investors thinking about today? Like, are people getting in? Is it a good time to be investing in hotels at this time?
The quick answer is absolutely. I think, and the three of us have been talking about it for a while. As more time goes on, I continue to be more confident that the back half of this decade is truly going to be another roaring 20s type of phenomena where, again, I'm talking specifically about traditional hotel space, but again, this protracted level of below average supply growth combined with so many factors that suggest we should comfortably expect meaningful, sustained growth on the demand side of the equation. Not in every market, not for every property type, not for every type of consumer, of traveler, but that again, part of we haven't even gotten into it today, but I mean, there's an element of that's been going on in the traditional hotel space that says, inbound international travel remains well below pre-downturn norms. So we think about if we just get back to where we were, that growth for just that one particular segment represents a substantial increase, and that will, in fact, that have a meaningful impact on occupancies, i.e., move their revenue needle and so forth. So I think that this, and I go back to that the jacket is you've researched and so forth. I mean, you got to have simply said two things to make the trip. I got to have the time to make the trip, and I have to have the economic resources to be able to travel away from home. And there's going to be a greater number of people moving forward, whether it's because of their age or their job situation, so forth. Yet not everybody, but just the numbers of people that have those two critical resources, and they will in fact be making the trip away from home. And traditional hotels and I believe short-term rentals comfortably are going to benefit from that. But Jack, at this point, I feel myself obligated to say, tell me what I'm missing.
The only thing you're missing is that the traditional hotel industry is not homogeneous. We have seen over the last several decades a movement away from new properties being built that were full service to properties that follow the so-called select service group, where the service levels are much lower, not limited service. But the other phenomenon that's occurring is the extended stay segment of the traditional hotel industry has really been booming. And what's going on, I think, long term is this merger of residential and
Yeah,
and
the old
and
deal.
occupy and short-term occupancy, so that people, as we were talking about, the option value of going from short-term rental to long-term rental is embedded in the whole extended stay segment of the industry. So, and I know you know a lot about each of these segments, particularly full-service hotels. Are you in agreement with my assessment that certain segments of this industry are going to power forward, others are going to lag behind for a number of reasons?
Oh, absolutely. I think, and you're right. I mean, consumer, and I go back to, it's all about this notion of changing consumer preferences, right? And we, again, if we go back to the story of 45 years ago now, Jack, when you and I were starting out doing this stuff, yeah, there were a lot of people that stayed in hotel rooms that sold stuff out of the trunk of their car. So their ability to back their car up to their hotel room, okay, was a very important attribute they were looking for when they decided, here's where I want to stay. So if you think back to the old Holiday Inns and Howard Johnson's and Ramadas, fast forward to today, the last thing anybody wants to see, by and large, is a room that has exterior corridors. So you can go back over time and see how these types of changes reflect responses to how consumer preferences have changed to the point where, again, now I still believe people, they want to stay somewhere that's at least as nice as what they have at home in their personal home. So they're looking for that from a quality level, from a fit and finish of the FF&E, and to some degree the service level that they're going to get. So again, there's going to continue to be the haves and the have-nots when it comes to the traditional hotel space. That some are finding that the demand for my product continues to grow at a very, very strong clip. But you think about the boutique hotel phenomena and so forth, and i.e. the polar opposite of what we had back in the 70s and 80s was the no surprises campaigns from the big chains, okay, that you can go to any one of our hotels anywhere along the interstate and you will have the exact same experience. The same look and feel of the guest room, the same dog kennel out back, the same menu in the restaurant, etc. Now it's the polar opposite. I mean, I want something that reflects the destination in which I've chosen to go. And again, it provides the services and the amenities that I'm used to getting when I'm home. When I made the comment about the kind of the roaring 20s, the back half of this decade, that's flying over at a fairly high level. And as you drop down, some will do incredibly well. Others will continue to fall off the far edge of the radar screen.
So, Mark, that's a great sort of segue to a question. I think we last discussed this maybe 10 years ago, and it sort of gets to the benefits of the brands. and what the brands provide traditional hotel industry. And as you know, you've got the brands, you've got the management companies, you've got the ownership groups. In short-term rentals, we've got the owners and the homeowners, and we have a lot of those homeowners sort of self-managing, of which you do have that in the hotel space too. And we've got these management companies, large management companies like a Vacasa that is also a brand, and trying to become a national brand, but there's no chains. There's no like I'm going to go stay in a Marriott, equivalent to the short-term rentals industry, except maybe like the OTAs like Airbnb and Vrbo, which aren't able to sort of dictate sort of quality requirements. So that's maybe a long-winded way to tee up a question around, and do you think brands will eventually make their way into short-term rentals, vacation rentals? Or do you think maybe it's too late in the industry for that to pop up? Because the brands were sort of the beginning. That's sort of what brought hotels into the mainstream, if I sort of interpret that correct.
Once again, Jamie, you're not right. No, I'm kidding. I'm kidding. As always, you're largely correct, mostly correct, if not entirely. No,
I was 98% correct, Jamie.
yeah, you got a ways to go.
Put a score on Jamie as terms of correctness here.
There you go. Well, a couple things, and I haven't looked at this in a long time, but Jack, you probably have this in your head. We think of the brands in the traditional hotel space because they're ubiquitous. Marriott, Hilton, Hyatt, Choice, Wyndham.
Yeah, they each have 30 brands. Well,
Yeah,
HG is 19. So
and the brand families are, but where I'm going with it is, I haven't looked at it well. I'm comfortably guessing half of the hotel rooms in the United States are independent. You don't think about it, you don't see it because you're kind of used to seeing the brands when you drive by down the highway or whatever. So, and I think that's long run norm, that's maxed out, whatever. But I think, and Jack, I'm kind of gearing up for a question for you, but I'm thinking about, what do you have to be a successful brand? Okay. You have to be able to have brand standards that, apostle the obvious, the consumer values. Okay. But that critically, you as the owner of the brand have the ability to maintain those standards at the unit level. Okay. And your ability to do that successfully is directly related to the value that your brand brings to that particular piece of real estate. So I think a challenge, so I think it's we're seeing it, right? Marriott, they're all getting into the short-term rental space to some degree, whether it's through loyalty programs or what have you. But I think it's inevitable that we will see more branding in the space, but I can't see it being anywhere near as ubiquitous in the short-term rental arena as it is in traditional hotels. But again, Jack, what say you?
no, I think you hit the mark, so to speak. Pun intended. People traveling are away from home. There's always a little bit of fear of when they're at home, they know where everything is and they know what's fixed and what's been broken. But when you go out on the road, you're looking for some certainty in the accommodation that you have. You recognize you're only going to be there a short period of time, but you still want some degree of certainty. So the brands offer that. And in addition, they've been working really hard on trying to find those consumer preferences that are emerging and play to them, especially with younger travelers. So I think there is some hope for, if you're looking for branding in the short-term rental space, but achieving that homogeneity across a large number of properties is a formidable task. I think we've had some upstarts that really haven't. I believe, I don't know where Sounder is now, but and Jamie, you know this space very, very well. I don't think they had a gangbuster sort of outcome, and it's going to take time. So first movers are not always the ones that succeed. But I think there's some limited branding opportunities, to summarize this, in the short-term rental area. And Jamie, you could be a much better commentator on that topic than I can.
Yeah, and I think some sort of brands are eventually gonna come in, but it's probably not gonna be the management companies. As you guys know, it's so hard to scale management companies and with all the labor that goes into it. So, and with brands, you need and a lot of inventory. You wanna be able to build the loyalty program. You wanna be able to have a unit in most markets across the country where someone would be looking to stay. And that's just really tough to do on the labor side.
Yeah, Jamie, I mean, it also strikes me, and Jack, we haven't talked about this in a real long time, but if you think about conceptually, what's the value proposition of a brand? And from a licensee perspective, I'm going to sign up for that brand. Is that conceptually, I'm convinced I can make $1 more on my investment if I get this license. But if I can't get $1 more, then why would I do it? There's no economic benefit to me. So I think that's going to be one of the real challenges that the brands will have to demonstrate, because there is a cost to having a brand.
Oh, it's
There-
heavy too.
There's an operating cost, and then there's the capital cost. And so in both of those typically are not small numbers. So it's an interesting question anyway, at least.
So we're getting towards the time end of the podcast. We're getting close to the hour, but I did want to ask you guys maybe a reflection question, since you guys still have quite a few years on me in terms of career, and you guys have done a lot. You've seen a lot in terms of and just growth and new brands and the entire really short-term rental industry over the length of your career. But looking back, and what are some lessons that you guys have learned that you wish you would have known at the beginning? And I'm gonna start with you, Jack, and then give you a second to think, Mark.
Uh, well, here's a self-serving one for you, Jamie. Hire smart young people.
Yes.
No, I'm half kidding, but I'm half serious that as you move through the maturity cycle, I guess, of your career, you certainly gain a lot of experience and can make judgments. But you miss things that the younger generations can supplement your knowledge with, and so I think that's a real important part of anybody who becomes able to hire additional people to help them in their efforts to succeed.
Mark?
Is that the kind of answer you were looking for? Oh no, because I can answer that a couple.
It's about 50% right.
Yeah, well, no. I only say because I'll say the same thing as Jack, only differently, right? Yeah, and you're a classic example. Good things happen when you hire people that are smarter than you. You learn a lot. And Jack, you and I have had this discussion over many years, but I would have thought in this point in my career that what we do day in and day out would become incredibly boring. Same old, nothing new. But it's the polar opposite, exact opposite of that. I mean, there's such change. And again, this whole short-term rental phenomena is such an interesting thing from a traditional hotelier's perspective.
Now we got to tackle AI to further your point.
Yeah.
That's a really good
Yeah,
thought.
so you try to figure out, what does this mean? And Jamie, one thing I'll always remember. I remember when we first started getting enough data to educate ourselves as to, does this short-term rental stuff mean anything to traditional hotels, or is it a separate alley, separate runway? We don't have to worry about it. And I think it was San Antonio where you first started doing this, where we would look at the monthly short-term rental activity, and we'd look at the traditional hotel activity, and we'd look at it over time. And was there any evidence during those peak periods that we would begin to see, that short-term rental, they're encroaching on the traditional hotel space and so forth. And and of course, the hotel industry is huge. So again, trying to understand the implications that come from and I'll say it this way purposely, the threat of short-term rentals on traditional hotels is a phenomenally interesting question. It's something that we continue to try and learn more and more about. But the good news is it's very clear short-term rentals are here to stay. And they're going to have more and more fans as more and more generations of travelers avail themselves of that lodging option, as opposed to the traditional hotel stay. Make sense?
Yeah, unless maybe we did too good of a job, and now the AHLA is coming at the short-term rental industry with guns blazing, that they've sort of seen a number of compression nights that they used to get decrease substantially. They think that that impact is coming from traditional short-term rentals. Maybe they can't compete as well as they thought they would in terms of, and we've got these professional run, purpose-built buildings that should beat short-term rentals 9 times out of 10, but are not. We can't raise rates like we could, so if we can't beat them, try to legislate them out of existence. Like we've seen, HLA and really succeeded and won in New York, and now, and we've gone from number of short-term rentals and in New York in the tens of thousands down to just a few hundred and in just 6 months. So, and it is, I'd say the competition is heating up. Brian Chesky in their Airbnb's earnings call last quarter mentioned hotels 17 times. And he said, hotels are the competition. That's what guests are now clearly choosing between a traditional hotel and a short-term rental in the same window in their browser. So maybe that tees up my last question to you, Mark. If we came back a year from now and we're chatting, and what do you think the headline would be? Stealing one of your typical questions.
Yeah. Boy, was Jack Corgel wrong. No, it won't be that. It won't be that. I think it's going to be beyond the who's our president, right? Well, it's going to be one of two people, it looks like. And I think it's going to be that a return to normalcy is going to become clearer, become much closer. And I think with that, diminished levels of uncertainty. And you guys have heard me talk about this a lot over the years, but the natural human response, if I'm not sure about something, is to do nothing. And so once that uncertainty, and again, in our traditional world, that applies to people like meeting planners. I mean, they have to book far in advance to get the space they want for the price they want at the time they want and all that kind of stuff. But if I'm not sure, I'm not booking. So I think there's going to be a meaningfully higher level of certainty in the marketplace a year from today. And I think we're going to be then talking more about upside types of things that are starting to play out.
Jack, do you have an opinion?
Well, I think one thing is fairly clear, and that is we're going to come off of this high interest rate environment, and with the Fed continuing to cut short-term rates. But I still worry about the long end of the curve because the government has to float so much. They have to sell so many 10-year treasuries and 30-year treasuries that the long end of the curve is going to stay high. So I'm hopeful that there'll be some communication between the short end and the long end of the curve, which will be reflected in people's ability to transact more and to build more. But I agree with Mark that there's going to be a sense of normalcy. I think the inflation picture is going to be better. Hopefully, supply increases in a wide variety of commodities and services is going to even bring prices down a little bit. And so I see things normalizing as Mark described them next year.
Well, that's a great note to sort of end on. Mark, Jack, thank you guys so much for joining the podcast. It was a pleasure to sort of host you guys and get to see you again. I miss our lunches, sort of hanging out in the old days.
Yeah, we'll do it again.
Good luck, Jamie.
Yeah, Jamie. Thanks for the opportunity.